What's good, superstars? Back with another living out of my brokerage account video. In today's video, as promised, I'll be going through the current holdings in my portfolio, explanation on why I have certain holdings or whatnot. I do have a much larger watch list. If you guys don't know, I'm not a financial advisor. Do not take anything I say or do here as financial advice. I'm just a guy filming in his car. And because I'm filming in my car, I'm unable to load TradingView, which I would love to show you guys because I have my entire watch list over there. Maybe another time we'll get better connection. But today, you got my portfolio. You got the investing manifesto. That's what I call it. I think it's funny. But anyway, let us continue here. So you guys have seen in the earlier video, actually episode 1. If you haven't seen that, you can go check the playlist for this series. And I go through my breakdown. The portfolio is part growth, part high yield. I'm using the growth in the margin account. I'm in Canada, which I link with my TFSA, but all of my high yielders are in the TFSA because I don't want to pay tax on capital gains. So the growth portion of my account, I'm never selling anything. So I'm using it to basically increase the margin amount by having hopefully gains in that portfolio. And then the TFSA, as I get increased distributions, as I keep contributing, I can pull those contributions, and then that'll give me some more TFSA space. Someone asked me in the previous video, like, why don't you just put everything at TFSA until it's maxed out? That's kind of why. I don't want to catch up to my maximum. I have quite a bit of space left since I withdrew for when I bought my house. But yeah, if I put everything into there and I close that off, then I'm gonna have to start buying dividend or distribution funds into my margin. Then I'm going to be taxed at them. So I'm going to keep going this way, see how it goes. But yeah, that's what I want to show you. But this spreadsheet has a lot more detail in it. Obviously, I've blacked out some things here because don't want everybody to see everything yet. Maybe eventually we'll get comfortable, we'll do it. But I do have a separate little table here on the right side. You can see the TFSA allowance, contribution, room. So I'm always tracking that. This way I know when I'm going to get close. If I have space for my high yielders, then I'm going to have to come up with another strategy if we get too close there. I track how much cash I have. It's all within this spreadsheet. It tracks itself. I got my equity, which just is over 50%. Actually, today was a huge red day. I was around 52, 53%. Now I'm down to 50% equity. And my margin buffer is 33% basically. And the total account profit loss, again, this is with Google Finance numbers, which sometimes aren't the most accurate. Sometimes I don't even have the number. I got to input it manually. So in ballpark, we're around $380 down. And didn't start this too long ago, but it's been a major overhaul, and I've been setting it up for this type of video. So hopefully you guys enjoy it. But we're going to go through the growth first. You can see I have growth written here, and we have growth single, growth index, and growth crypto and commodities. So growth single are in blue. I got Apple, Amazon, Berkshire, which isn't really a single, but at the same time I'm treating it as a single. Costco, Google, Microsoft, Nvidia. These are some stocks that like I can't see myself not owning. I've owned them in my RSP. I'm owning them again in this portfolio. I believe in them long term. Apple, everybody's on Apple iPhones. It's just embedded in society. Amazon's taking over the world. You guys see it. They're delivering everything now. You're buying everything on Amazon. Berkshire, it's a little bit of an old school play, but I'm curious to see how it goes. Obviously, some bright minds over there. So it's a little bit, right now it's a little larger size just because they've been down. So I've been picking that up when I could. Costco, my biggest single stock right now because they have had a really, really hard few weeks here. So I've been loading up on some Costco. I love Costco. Go there every week to do groceries and whatnot. I don't do these huge hauls there, but I do some more semi-regular hauls. Google, you're watching this on YouTube. Google owns YouTube. Microsoft, you're probably on a computer. If it's not a MacBook, it's a PC. Windows, probably on there. So Microsoft, and then I got Nvidia, which just want to be part of the gang, you know, with the processing and all that stuff for AI. Wanted to have that in there too. So then we get down to our indexes. These are all growth indexes. We got FCIV, which is Canadian. We got FTEC, which is technology fund. So red is Canadian funds, black are American funds. So I got a lot of American funds in the portfolio. You can see QQQ, obviously. That's the technology ETF and NASDAQ ETF. SCHD, SCHG. I actually prefer SCHG for the growth, but SCHD has had some more downtime, so I've been picking it up. The SPY, which is just your S&P 500. SPY growth, that's SPY-G. TQQQ, I've been picking this up when the markets are down, super down, just as a hedge. Basically, they go down. This is a triple leverage, so if it does rebound, you make up your gains a little bit faster. If it goes down, you're going to lose a lot more, a lot faster. Same thing for the UPRO, which is the same idea for the S&P 500. VFV, it's your Canadian version S&P 500. It's been outpacing the S&P, SPY, so VFV has always been a good hold. You got VGT, VOO, VOOG, and VUG, basic Vanguard funds. A bunch of them. I'm not in them too deep. You can see only like 1 to 2% in them. They've done pretty well. They've tracked the markets. VXM and VXM.B, one's hedged, one's not hedged. They do perform differently, so I've been picking them up differently as they go, but these are more like international exposure, Canadian funds, and then you got XLK. So a bunch of ETFs in there. Then, Wealthsimple, my brokerage of choice, they now allow you to buy into physical gold, which actually goes into, this allows, it actually can be in your portfolio, so something I got to track manually here. And that might not even be the price. I think I've updated it a couple days ago, so anything that you see in pink, that's something I have to manually update because Google Sheets will not allow it. GLD, SLV, IBIT. I also have trackers on palladium and platinum. I'm enjoying these precious metals, so I want to take it out. I got a count here. So growth, I got 7. Index, I got 17. And crypto commodities, I got 4. 28 total just in the growth portion. Guys, I buy, I do not sell. If I like something, I buy it, I hold it. That's it. I'm not selling it anymore. So we're going to have lots of funds in here. We're going to have lots of stocks in here. And it is what it is. I don't know why this came out as a percentage. So we're just going to put it as a number. But anyway, usually that's a little bit more decimals too. Like, there we go. I copy and pasted this one over. So that we're getting into the income portfolio. If you want to see my breakdown percentage-wise of what my goal and my targets are, you can go back to the beginning of the video, or you can go check out video number 1. Like I said, I go through and explain my methodology, why I have certain percentages. You could also see the returns here. So like my growth is doing pretty well in terms of returns. We're up 3.7%. And then this TFSA account, which we know is going to have erosion, but I am not tracking total return here. This is just return without the distributions. That's separate. I don't really want to include that here. Like, I don't really care for the total return here. This is more trying to get my cash flow up. I do worry if the yield starts to erode like crazy, and one day we'll go through the dividend calendar. You can see at the bottom there, I got a tab for that, but the yield erosion is something that bothers me more than the portfolio erosion, because this is doing its job. It's doing something. So as long as my dividends and distributions keep increasing overall, we're going to leave it alone. These, we might not sell ever. We might sell them. We might swap them depending on what's going on. These are basically your flavors of the month. So my individual high yielders, we got from different funds. So we got AMYY, which is AMD. We got AMZY, which is Amazon. And these are the yield max funds. Then you got AZYY, which is Amazon, but for Granite shares. You got GOOW, which is a Round Hill fund. GOOY, which is a yield max fund. So I've been buying them and I haven't been selling them. So I'm keeping tabs on all of them. You can see my percentages beside. It kind of gives you an idea which ones I favor. Don't buy anything. I'm telling you, I'm making this video in my car. It's ridiculous. Like, you guys are going to listen to someone in their car. Don't do that, all right? That would be irresponsible. Just watch it, have fun, enjoy, see if I go up, see if I go down. Right now I'm down. Okay, so like, you wouldn't want to follow that anyways. So anything ending in a W pretty much is a Round Hill account. Anything fund, anything ending in a Y would be a yield max. Anything ending in a YY would be would be a Granite shares, and then I think II maybe as well. I got to double check that one. But that's my Tesla exposure. You got Palantir exposure, Nvidia, Robinhood, Google, Amazon, and AMD. So that's the single stocks that I got for high yielders. Now, this is something I'm starting to love. I'm really liking a lot of the Canadian ETFs in the high yield space. They're not as high yielding, and a lot of the ETFs or index ETFs that are in the high yield space aren't as high yielding. But I'm really starting to lean into the Canadians when you'll see by the amount of red here. So we got Bank, which is banks. Got BIGY, which is kind of like HHIS, which are like more diverse funds. I think BIGY holds a little bit different things, and a little bit higher yielder. BKSAL, another one. This one is also bank related. I think has some insurance in there as well. Canny, same type of thing. C-Day, Q-Day, and S-Day are newer funds, which I'm enjoying. One's for the S&P, one's for the QQQ. They do a little bit of a different type of distribution. They do a lot of incorporation of VOO as well. So they don't write necessarily on 100% of all of their what they're holding, But we'll go into detail on these funds in another video. Like I can talk here for like hours if I were to do that. So just going quickly through them. Got ENCL, FEP I, HDIV, HYLD, which are both Hamilton funds in Canada. IWMY is a Russell 2000 fund. QQCL, and again, these are the Qs. These are all NASDAQ related. Sorry, this is the Russell here. Another Russell, RDTE, SPYI, TDAC. So the TDAC and the, where'd the other one go? The TDAC and the T-SPY. These two here are basically like, the guy who's running those funds is basically an engineer, I think, and he doesn't like analysis. He's getting like the computers to run those ones. So those ones are pretty fun to track. Again, not really high percentages in the portfolio, but have been noticing that they've been doing half decent. Like TDAC, you can see 3% up. SPY only 1% down, but the returns have been pretty decent when you incorporate the dividend. USCL, that's another S&P 500. Alti, that's another fan favorite, but right now it's in the doghouse. It's down 16%, but it does pay a high dividend. WPay, another one, well-rounded, but down 7%. That was popular for a while. YMAX, these are all well-rounded ones, and then YSPY, which obviously S&P. Then we get into the crypto, high-yielding ETFs. I got blocks, BTCI, again, Bitcoin funds, and this one's a little bit more well-rounded. Crypto, CEPI, another crypto one. Coinbase from Granite Shares. Goldie, which is a gold one. iGold is a gold one. MSTE and MISTI. These are Yield Max, and I think this is Evolve. I got to double check. But in Canada, there's a fund for strategy. Basically, I'm putting that into the crypto because they hold only Bitcoin and other crypto, whatever. So that's staying in the assets here. And then XBTY and YBTC are Bitcoin funds again. Again, these are getting crushed. Like Bitcoin's been having a terrible time recently, but at the end of the day, they're staying in there. Look how many I got in this side. 48 funds, 14 growth, 24 index, and 10 crypto commodity. Guys, I'm going to go into more detail here. I can go through the sheet a little bit more detailed. I only got a limited time in the car here, but margin maintenance is another line item I like to have. I put the percentages here for each fund on my brokerage. Different brokerages have different margin maintenances required. What you're going to do is you're going to multiply your margin maintenance by the current value of the funds that you hold, and that will tell you how much you need to have in your account before a margin call. So like if it's a 50% and you own $200 of that stock, you have to hold 100%, $100. If it gets below $100, you're going to get margin called on that stock, for example, right? So at the end of the day, it's as a portfolio as a whole. So when you multiply these through, add them up together, you're going to get a total number, which I got in there. And that number plus the one from the other portfolio basically makes up my margin maintenance. I carry that up over here, and you'll see I have a number for margin required. That will be the total there. And basically, portfolio minus that's how much my portfolio can drop overall. So lots of fun, lots of digging. I'm a spreadsheet guy. I'm a holder. If you cannot tell, I'm very slow to sell anything unless I have a play or a plan. Right now, I'm very new to this, so I'm buying everything and seeing what I like the best, seeing how things perform. I have that luxury, I guess, to see how they do. Let me know if you have any of these funds. How do you like my breakdown? Have you enjoyed this series? I'm going to continue to show you how the performance is in the next video. Obviously, you can see here what the performance is doing right now, $380 down, but we'll go through that other part again, where I show you the projections for the future and how we're performing and how we've been doing on the track record in the next video. So that's something I enjoy doing. I enjoy following it. Hey, actually, we got a little bit more equity while I've been sitting here. I don't know how that's even possible, but I guess this is tracking after hours. Guys, we'll see you in the next one. I love you. Bye.